Thank you so much, Gene. And with the time that we've got remaining, just want to take a brief moment to ask our panelists for their key takeaways or their final thoughts this afternoon. Lorenzo, you were the first to kick us off. Perhaps you want to be the first to give us a few of your final thoughts.
Sure. Well, I think a lot of the points that have been covered here, whether you're talking about fact patterns or just qualitative descriptions of the requirements, a lot of these incentive-based provisions, documentation is going to be key. And you really I would say, tell the story of the project. The same reason you're doing a business deal. Those things should show through in the event of an audit. And I think that's the one key I always think about when you're going through one of these things.
Thank you so much, Derek. We then came to you. Perhaps you want to give us a few of your final thoughts.
Well, I'll leave you with one thought, which is, unfortunately, I think these red zones and orange zones are probably going to continue past the end of this year. And the IRS, I would expect, will actually issue additional guidance that extends some of the COVID relief to 2021. But until then, there's a cliff at the end of this year. So certainly if you have any clients that are looking to invest in a QOF and are looking to take advantage of that part of the relief, they need to figure out how to do it this month. Thanks.
Thank you so much. Finally, Gene, you close this out. Perhaps you want to be the last one to give us a few of your final thoughts from today's webcast.
Sure, and I'll just talk about if you're really considering relying on the proposed regs, you have to really understand what differences there are between those regs and the final regs. For the most part, the final regs seem to be more helpful to taxpayers. So if you're going to rely on those proposed regs and be consistent, you have to be consistent with the proposed regs, except as I noted earlier, there isn't a proposed reg with respect to 10-year exclusion gains